Hey everyone, welcome back to Corporate Decoder, where we make sense of the messy world of corporate finance. Today, we're diving deep into ENBRIDGE's latest quarterly report, and let's just say this one has some interesting moves and big numbers. This is ENBRIDGE's 10Q report, basically a check-in on how the company is doing financially every 3 months. It's filed with the US Securities and Exchange Commission, and it gives us a peek under the hood beyond the polished press releases. ENBRIDGE is a huge name in the energy infrastructure world, especially known for its vast network of pipelines moving oil and gas across North America. They've also been making big plays in renewable energy, so it's always interesting to see how those different parts of the business are doing. Let's jump straight into the numbers. The first thing that jumps out is their total operating revenues, which hit a massive 14,876 million Canadian dollars for the 3 months ending June 30, 2025. That's a big jump from the same period last year, showing that their core businesses are bringing in a lot more money. Specifically, their gas distribution sales were up to 1,763 million Canadian dollars. This is a really important area for them, especially after those big acquisitions we've heard about, and it's good to see that part of the business is growing. Now, here's a really interesting part. Look at the gain on disposition of equity investments. In 2024, they had a healthy gain of 1,091 million, but that's zero for the 3 months ending June 30, 2025. This tells us they sold some assets last year, which boosted their profit spend, but that one-time boost isn't there this quarter. But then we see this impairment of long-lived assets charge of 330 million. This usually means they've had to write down the value of some of their assets because they're not worth as much as they thought. The big number here is in gas distribution and storage, which they explain is due to an order from the Ohio Commission. This is a concrete negative impact on their reported earnings this quarter. Let's look at the cash generated from operating activities. For the 6 months ending June 30, 2025, they brought in 6,291 million Canadian dollars. That's up from about 5,965 million last year, which is a positive sign. It shows the company is generating solid cash from its day-to-day business operations. On the other hand, their capital expenditures are quite high. For the 6 months ending June 30, 2025, they spent 4,648 million Canadian dollars on investing activities. This is a lot of money, but it's understandable given they're always building new pipelines and investing in renewable energy projects. However, it's significantly lower than the 11,230 million spent in the same period last year, mainly because they made those big acquisitions in 2024. Now let's check financing. The net change in short-term borrowing shows a positive 385 million for the 6 months ending June 30, 2025. This means they borrowed a bit more in short-term loans. And look at this, debenture and term note issues, net of issue costs, were a huge 6,530 million Canadian dollars in 2025. That's a significant chunk of debt they took on, likely to fund those large projects. Let's look at their balance sheet, which is their snapshot of assets, liabilities, and equity. Total assets stand at 21,592 million Canadian dollars, down slightly from over 21,973 million at the end of last year. Their long-term debt is substantial, sitting at 96,981 million Canadian dollars. This is a big number and something to keep an eye on, but it's also necessary for a company investing heavily in large infrastructure. And here's the goodwill number, 35,162 million. Goodwill represents the excess of the purchase price of an acquisition over the fair value of the net identifiable assets acquired. A big goodwill number often means a company has made significant acquisitions, like ENBRIDGE has with those US gas utilities. Total ENBRIDGE Inc. shareholders' equity is 65,448 million Canadian dollars. It's down from last year, partly because of those big dividend payments they made. This section on accumulated other comprehensive income shows changes in equity that aren't from regular earnings. Notice the foreign currency translation adjustments. For the 6 months ending June 30, 2025, they have a pretty large negative number here, 13,356 million. This is mostly due to the strengthening Canadian dollar, which makes their US assets worth less when converted back to Canadian dollars. When we look at their fair value measurements, level 3 inputs are crucial. These are the most subjective and based on unobservable data. For commodity contracts, the unobservable input here is the forward gas price. A simple way to think about it is that the value of these contracts depends on their predictions of future gas prices, and that's where the uncertainty lies. ENBRIDGE uses a lot of financial instruments to manage risks like currency changes, interest rate swings, and commodity price fluctuations. They're essentially trying to lock in predictable costs and revenues. For example, their foreign exchange exposure is significant, and they use derivatives to manage that. The non-qualifying derivative instruments section shows unrealized gains and losses. In the 3 months ending June 30, 32 million Canadian dollar unrealized gain on these. This is mainly from foreign exchange contracts, and it's not cash in hand, but it does affect their reported earnings. Looking at their business segments, Liquids Pipelines had earnings before interest, taxes, depreciation, and amortization, or EBITDA, of 2,331 million Canadian dollars for the 3 months ending June 31 million Canadian dollars for the 3 months ending June 30, 2025. This is a slight decrease from the same period last year. They mention lower volumes on key pipelines like Flanagan South and Spearhead as a reason. Gas transmission EBITDA was 1,442 million Canadian dollars, down from 2,095 million. This segment was hit hard by the absence of the gain on sale of their Alliance Pipeline and Aux Sable interest, which was a big boost last year. The gas distribution and storage segment saw a drop in EBITDA too, from 567 million to 510 million to 510 million. This is partly due to that impairment charge we saw earlier related to that Ohio Commission order, but the other factors like full quarter contributions from recent acquisitions and better weather in Ontario helped offset some of that. Renewable power generation EBITDA also dipped slightly. This is attributed to lower fees on wind development contracts and weaker contributions from European offshore wind projects, partly due to less wind. And finally, the eliminations and other segment usually includes corporate level items and hedging impacts. This quarter they had a big positive swing, mainly due to those unrealized derivative gains we talked about earlier. Let's look at their growth projects. The Texas Eastern Modernization Project is under construction, with nearly $200 million spent so far out of a total estimated cost of $400 million. This is a significant investment in upgrading their gas transmission system. They also mention an update on the Woodfibre LNG project. They've agreed to new commercial terms that are expected to improve their return on capital, which is great news for investors. And in renewables, the Calvados offshore wind project in Europe. ENBRIDGE's ownership interest is about 21.7%. For their share, they've spent about 2094 million euros out of a total cost of about 1 billion euros. This project is also well into construction and expected to be in service around 2027. Now, for a company this size, always thinking about liquidity is key. ENBRIDGE is emphasizing its strong financial position. They have access to significant credit facilities totaling over 22 billion Canadian dollars, with most of it available. Plus, they have a lot of cash and cash equivalents. This means they're well positioned to handle their upcoming expenses and investments. When we look at their long-term debt issuances for the first half of 2025, it's a hefty list of new debt taken on, totaling billions in both Canadian and US dollars. This is a clear sign of how much capital they're deploying for growth. Now for some legal updates that could impact ENBRIDGE. Remember Line 5, the pipeline that's a bit controversial in Michigan. The legal battles continue. A crucial decision from the US Court of Appeals in June stated that the case should go back to state court. This is a setback for ENBRIDGE, but they've taken this to the US Supreme Court, which agreed to review it. The outcome of this case is really important for their operations. Then there's the Dakota Access Pipeline, or DAPL. Legal challenges are still ongoing there with a recent dismissal of a complaint by the tribes, but an appeal is expected. The environmental review process is also continuing, and it's unclear how that will ultimately impact the pipeline's future. And again, with Line 5, the legal back and forth between ENBRIDGE and the state of Michigan is complex, with the case shifting between federal and state courts, and now heading to the Supreme Court. It shows the significant regulatory and legal hurdles they sometimes face. So what's the story here? ENBRIDGE is clearly investing heavily in growth, especially with those big acquisitions in the gas utility sector and ongoing renewable projects. They're generating good cash from operations, but they're also taking on a lot of debt to fuel this expansion. The impairment charge is a notable concern, highlighting the risks in regulated industries. Plus, those legal battles, particularly around Line 5, continue to cast a shadow. While their strategy positions them for future growth, investors need to be aware of the financial leverage and the potential regulatory and legal risks that could impact their bottom line. Alright, that wraps up our deep dive into ENBRIDGE's quarterly report. What's your take on these numbers and what they signal for the company's future? Let me know in the comments below. If this analysis was valuable, hitting that like button really helps the channel grow, and make sure you're subscribed for more. And hey, if you want to get more involved and discuss these filings with other finance enthusiasts, check out our Discord community. The link is in the description. Thanks for watching, and I'll see you next time on Corporate Decoder.